thank you very much for coming in. Um,
Thanks for having me.
you're most welcome. If there was, as we were talking, if there was anybody who I could have done it, it's you.
Too much credit. It's all you. You know, you had the dream, you had the vision for it. I remember us having that conversation about 2 years ago. I told you when I got here and you told me that I was the first. I said you made my day. So I really appreciate it.
Please give me a little background into how, because I know that you have a passion for videography, and you were in this business. While now the world is exploding in videography, and everybody wants to have this skill. You moved on from that, and then you went into the mortgage business. So how do you think that happened, and what made you transition from this field of videography into a totally different field? Please explain me that. I'm very interested to know that.
Yeah, no, it's a great question. So a little bit of history. I had a photography and video business, did a lot of weddings, marketing, creating content for different, local businesses. And I loved it. It was 26 years that I had done it. It's the only thing I've ever known how to do. Originally went to school because I wanted to get into filmmaking, and then realized that school wasn't really for me. In a sense, I wanted to make movies. I didn't want to, write scripts or learn about, theory and this and that. I knew what I liked, and, I realized I needed a different pathway. And I think when it came to, easiest entry point was starting my own business and providing photo and video services for weddings. And I had a very much documentary style approach to it. So that creative aspect was still there, and took a lot of things that I learned from different movies. Reality television at the time wasn't really that big, but, I looked at documentaries and tried to, kind of break it down into a structure that I could apply to weddings, where you're sitting down and, I remember my first wedding video, basically, pitching the idea to a couple. I said, okay, so it's going to start with us having, multiple interviews together that took, 3-4 hours at a time, talking about their past, talking about their history, collecting old family photographs. So it became something more than just documenting the actual day. And their voices and their answers ended up narrating the actual wedding video at the end. So it became something more than just the day of. It turned into, culturally, we both come from very rich backgrounds, and family is very important. And, for us, when you go to a wedding, it's not just about two people getting married. It's about two families joining. It's about long history and the shoulders that we stand on. So I really wanted to incorporate and do that, do something a little bit different. And that's kind of how the photography and video kind of took off. And I found great success in it. Again, I was started in 1997. And it was a leap of faith. I remember, my parents were very supportive of it. My dad, very, business, with a very strong business sense, said, okay, this is what you want to do. I said, well, you got to have a business plan. And, like we talked about, when you don't know how to do something, there's people out there that can guide you and help you through the way. And just found me a good mentor and a coach, and somebody that could help me develop a business plan and a business model, and took off. But I think in regards to the transitioning, so after about 20 years, and I tell everybody this, everybody thought I was crazy because, it was a very successful business. But I just kind of lost my passion for it because it was the processes that I had in place were so fine-tuned that it was a well-oiled machine. And it was great, and it was a huge success, but I just was looking for something different kinds of challenges, right? And I tell everybody, do something for 26 years, and then, we'll talk about how you feel on why you need to change, right? So I needed something different. And what I realized very quickly was that it wasn't the photography and video that was driving that passion, but what it was that entrepreneurial spirit. And I think that's what, when I realized that at the core of anything that I've done that's been successful is customer service, right? Is finding a need and then satisfying that need and exceeding expectations,
Mm-hmm.
right?
So did you say that you went to school for that?
For
For photography and videography?
so I did some night school courses. Yeah, it
Mm-hmm.
was at the time, you know, really in 1997, there was no, you know, there was no social media, right?
Mm-hmm.
So really, I was learning from old men,
Mm-hmm.
and it was not as open. They were not as open to teaching things, but I was persistent, found some good mentors, and took some night school courses. There was one photographer in particular in our area, because the entry point into photography and videography was very high, and it wasn't it wasn't an educational entry point. It was financial, right?
High means in terms of
Like
investment.
investment. The initial investment is very high. It's not like it is today, which is fantastic
Yeah,
for the industry
yeah.
now, right? I think my first SLR camera I bought was $5,000.
Wow.
Right, and that's a film camera
Wow.
that's sitting in my basement, and I don't even know why I keep it.
Probably that's like now redundant.
Oh my God, it's not even a paperweight.
It's just like antique value for that.
Yeah, it's and the thing is, it's not even antique value because it was a high tech automatic. It had manual features, fully manual SLR, but it wasn't like chrome. It didn't have that old school look that you really want to wear it around your neck and walk around, do street photography with. So it has no value now.
Can you believe how technology progresses and then like things starts becoming cheaper, and technology starts becoming cheaper. And now you could buy cameras probably with like so much technology in them for half the price.
Yeah, I mean that's the beauty of it is what the technology has become more accessible, which is a great thing. I mean, I know that there are photographers that there's one in particular who's a very famous photographer, wedding photographer, shot an entire wedding on his iPhone.
Wow!
Right, and they look great. And
they look good.
Yeah, they look.
You just
great.
need to know how to operate a camera, how to operate an iPhone, and get the results like that.
Yeah.
A lot of things happen in post-production as well, huh?
Yeah, absolutely. And I think when it comes down to it, again, it's, I have a lot of friends in this industry and in this business that, kind of scoffed at the fact that, basically everybody's a photographer now, but what you can't teach somebody is that customer service. Like that's the point of difference. So the point of difference is no longer I have a camera, which means I'm professional. It's can I provide a service to somebody? Can I exceed their expectations? I am the differentiator, right? At the end of the day, like if we talk about wedding photography, when somebody shops for a photographer, it's usually at 1:00 in the morning. And it's usually one of the partners is online and inboxing or messaging through the contact forums or DMs, 5 or 6 different wedding photographers. And I would say confidently, they narrow it down to the top 3 or 4 based on quality of work, based on price point. And the only thing that's going to make the difference is that personal connection, right? And the business practices. I mean, I can confidently say 90% of all the jobs I ever got is just because I was the first one out the gate to respond. That's it. I'm not the best photographer, and I had this slogan that I confidently wore around Newmarket and Aurora as I was, at the time, the only full-time wedding photographer in Newmarket and Aurora.
That's pretty cool. So you had that edge.
Yeah, and you know what it was? It was... it was because I knew it, right? Everyone's a photographer, but not everyone can make a business out of it. In a sense, pay their bills, pay their mortgage, right? So you know what? To me, that was an edge, and that was an edge in a sense that was one thing that was a differentiator that I could truthfully say that was different than anybody else. And that gave me an edge for sure.
going back to the way you started, how you learned the art of photography or videography, you learn it through school, but you also learn it from a few mentors that you just mentioned, that you found some good mentors. I've come across people who believe, from the old school learning people, that the difference between the types of learning from the way you learned and the way kids are learning now is that you have more depth of knowledge, and the kids right now, they just use autofocus cameras. And this is not just for photography, this is like for anything in today's environment. So do you believe that you have to go through the grind, like the old school grind, or what's happening right now is just point and shoot cameras, and just do post production? And this is also, do you think that knowledge base is important, or this is also good that we could just do it like with just grab a camera and just go ahead?
So prior to COVID, for I think 3 or 4 years, I was getting co-op students from a local high school, and that was, I want to say, 2017 to COVID time. And it was the biggest eye opener to me. And that's why I've kind of removed any kind of, I don't want to say I don't have self-importance, but there's no ego. And what I'm seeing from 14, 15, and 16-year-olds coming out of the high schools, I mean, I'm no competition to them.
In terms of
Their skill and their ability,
oh yeah,
far surpasses. I mean, they're way better. And not only that, they just get it. Like, so
is it the affinity to the technology, because they are because the technology that they're using, it's so commonplace right now? Because back in the day, to get a hand on a camera like the one that you were talking about, it was not that common. Now everybody has access to technology, more or less,
yeah, and they also have access to all the information that they need, like we just talked about before we got on camera. Everything, anything anybody needs to learn something new is available through social media, on YouTube. There's no excuse. You do not have to go to school to learn certain things, and so a perfect example was, oh, well, this is a common conversation that's only now being accepted. And I was having it 10 years ago with other photographers that would say, Ahmad, nobody can edit like I edit my pictures. Post-production, only I can do it the way that I like it. And I said, okay, that's you. And they said, well, what do you do? I said, well, I outsource it, right? And they're like, well, how can you outsource your editing? Like, that's the touch.
Yeah, that's the final product.
That's the final product.
Yeah.
And not only was I outsourcing it, I was outsourcing it to co-op students that were 14 and 15 years old that could do a better job than I could. All I had to do was just show them a process, and they were, Yasser, I wasn't even picking the photo. And again, like, this is me disclosing, things that I've never really talked about, but 10 years ago, I was letting the co-op students pick the wedding pictures. They were culling the images. So I would give them, let's say, 3,000 images. I said, I need 975. I don't want to look at them. You pick them.
Wow.
Right. But I taught them what to look for. I taught them a process, and the process starts, but here's the difference. The process starts with me not taking a million photographs. Right. So I'm already thinking of post-production and the other individual involved while I'm taking the picture. Right. So if I'm taking 2 or 3 portraits of, one pose, I move on to something else and move on to something else. It's very clean. There's no fat. There's no filler. They still have to, weed out probably 40%, 35% of the pictures, but there's a structure there. Right. It's after, 20 years at that time, after 20 years, you learn things, right? And you learn that every minute counts. So I was never, I was always looking at how, in regards to business, how efficient can we get? How much money am I making per minute that I'm sitting here looking at something, right? Because every minute that you spend, you're losing money.
Mm-hmm.
And I have friends that will take 3, 4, 5, 6 weeks to edit pictures. To me, you might as well just get a job at McDonald's. You'll make more money, right? But what I learned was I could teach somebody what I know and what I want. And as long as they're a good student and teachable, these young guys and girls, they far exceed anything that I could do. And they were doing it quicker. And the first time it happened, I told my wife, she's like, there's no way.
Mm-hmm.
And she's just like, yeah, I showed her. I'm like, show me which one I edited and show me which one the student did.
That's pretty cool.
And nobody could tell the difference. So I just ran with it. Now it's become very commonplace. People are using AI as well.
Mm-hmm.
That was also something that I adopted very early on. I
Cool.
think it's been about 8 years. There's 1 or 2 companies in particular that offer it, where the AI software learns how you like things, and it does a better,
makes the job easier.
it does a better job.
It does a better job.
It does a better job. So technology isn't been, to me, the technology is, going back to your question, I don't think you don't have to have, the hard knock life in order to reap the benefits today, right? It's like, it's like even these lights. I don't know how they're made. I just know that when I hit the switch, they work.
Yeah.
And that's all that matters.
Yeah.
Right?
So what I get from your experience in videography and that aspect of your life, and you're transitioning into the mortgage business, is what you could bring from the past experience to this current job that you have is customer service.
Yeah, I would say
is that'd be fair to say?
Yeah, definitely customer service, and having run. It's not an easy job, right? It's not an easy job.
Easy job. The mortgage business or the photography business?
Well, I would say the mortgage business, especially in the last couple of years, is very challenging.
Mm-hmm.
I love the challenge, but I also had 26 years of self-employed experience,
Mm-hmm.
right? So someone that's leaving a regular 9 to 5 to become a mortgage agent or a broker, I could see that being very difficult.
Stressful.
Stressful.
Yeah.
Unless you have, unless you have financing in place that's going to cover your bills, right? Because there's going to be a learning curve. There's going to be, a time when there's no money coming in.
Because there might not be a check coming after every 2 weeks, huh?
There is definitely no checks coming after every 2 weeks.
Yeah.
From what I've learned from my experience is it's kind of like a 3-month cycle, 90 days. So
Okay.
So there's a lot of nurturing over the course of 90 days, over months. So you have to be willing to play the long game, right? You have to nurture buyers. We're not talking about people spending $5,000, $6,000 on, wedding photography or videography. We're talking about, for most people, the most expensive asset they're ever going to purchase. And that's not something that they just do overnight. It's not just they fill out a contact form and we're good to
it's
go.
just an on-off switch, It takes months and months of planning and
sometimes
research
years.
And exactly.
Yeah, sometimes years. So I think, the biggest skill that I brought over was that I understood how to play the long game and how to build relationships and how to connect with people. To me, that's why, there's the technology isn't necessarily the value. I've understood that the value is not the mortgage product. I'm the value.
And the relationships you create.
And the relationships I create. That's the value, right? So at the end of the day, price never, just like in the photography business, price never becomes the number one factor. If I'm looking at my ideal customer, right? I have this avatar of people that, that are my ideal customers, my ideal clients, and they are not, and I learned this after about 6 months of being in this business, because this has changed and it's always evolving. But what I've realized now is it's not the AAA customer that can just walk into a bank and get whatever they want, right? Because that's not my ideal customer. Who am I helping, right? At the end of the
Probably the first time home buyer.
well,
The
it's not.
most difficult transaction in probably your business. Huh?
Yeah, but a lot of first-time home buyers, a lot of first-time investors, a lot of people that life has gotten expensive and they need help.
So
Right.
you have to deal with all the jitters that your clients would have because they're either the first time home buyers or the first time investors. Because I remember my time when I was the first time home buyers, I was jotting down my finances right to the bus passes that I would I would have to take care of, like everything, how much water I'm going to use, because I was moving from a small house to a bigger house, with like my own house, and then every penny counts because you're trying to manage your expenses. So during your conversation, you touched base on the past 2 years being difficult. Okay, it's a reality. Like, I don't think anybody was expecting, at least I was not expecting, that coming out of COVID, the everyday life, just we would never get back to the routines that we were in, and this thing is gone. COVID is gone, and we don't have to wear masks and we don't have to follow those mandates anymore. We would still not be where we were before, even close. Mm. So how has I know mortgage business and the housing business has been affected. And once that part of the life is affected, economy is affected, everything gets affected. Everything. I don't know why, but that's the reality. Yeah? So please tell me something about what you are seeing, because I know Toronto Real Estate Board is predicting some improvements in 2024 and definitely 2025. But I also hear on the flip side that it's not going to be, 2024 would not going to be that easy, and it still would have the general population would still feel the pinch of inflation and high interest rates, and so the mood is still not getting back to where it should be. What are the challenges in your business right now?
I mean, if to put things into perspective, I always tell this example. For us, anyways, I can only really speak for myself and like what I'm seeing with clients. But for us, I would say in the last 2 years, I don't think I've ever gone to the grocery store and fulfilled every item on my list because I refused to pay a certain price for certain items. Right? Like, that's a reality. Grocery stores, everyday expenses has gone up so much.
Yes.
So much.
You feel it every day.
Yeah, and everywhere, we've had to, I have this conversation with some of my friends. It's like, these are the conversations that we have around the dinner table with the kids, because they have to understand, and part of me, is conflicted in regards to, okay, how much do we disclose to our children about, let's say how life is changed a little bit in regards to finances, and we've, my wife and I are of the belief that, look, they need to understand, we're not taking 2 vacations a year, we're not doing certain things. We have to be, and for us, it's really, I think, the way that we've angled it with the children is from a position of, it's not about not being able to do certain things. It's more, the focus is on less waste, not being wasteful with anything that we have, and giving more value to every single thing that we have, whether it's relationships with people, whether it's food that's in the fridge, whether it's clothes on our back, what's in our closet. So we have made them more focused and aware that we need to take care of what we have, and we need to give it more value, because it really is more, things that we have are more valuable now, because the cost of purchasing and replacing certain things is, I mean, $1 is not what it was, 3-4 years ago, 2 years ago. So that's been our,
So at a family level, you have adjusted because of the situation that the economy is in right now.
Yes.
Where are your clients adjusting? How are they adjusting? What are they facing, particularly in terms of new buyers, who, by new buyers, I mean buyers in the past 2 years, and those buyers whose mortgage is now going to get renewed in 24, 25. What I hear is that there's going to be a shock for them. How are you managing them? What's the level of shock for them? What's the future looking for them?
I think my conversations with them, and I'm very active on social media with videos, very active reaching out with phone calls on a regular basis, emails on a regular basis, is if your mortgage is coming up in 12 months, get the conversation started, right? Because the biggest challenge is not necessarily that the interest rate is going to be higher. It is going to be higher, but we need to get ahead of certain problems that could compromise someone's ability to shop around for a better product or a better rate. So what happens is, they got their mortgage, let's say, 4 years ago, and it's coming up. And, we had some credit card debt here, credit card debt there, little things here. They make their payments. Everything is good. But that debt is there. Mm-hmm. And what happens is, because the interest rate has gone up significantly, maybe they were sitting at a 2.5, something like that, maybe even lower. But let's say average would be like anywhere from 2.5 to 3, and it's coming up for renewal. Now we're looking at 5.5, potentially 6, depending on the situation. That's a big jump. That's almost double or more. Doesn't mean that their mortgage payment's going to be double, but it could potentially limit them from taking their mortgage and shopping it around to somebody else to get a better deal and a better product. So, meaning, if they're good with their mortgage payments, they're going to get a renewal back from their lender.
From the current lender.
From their current lender. And all they have to do is sign that paperwork and go off. But I can almost 100% guarantee that that rate that they're getting is not the same rate that somebody new off the street would get. It's going to be higher. It always is, because, I mean, you think of it like this is how I kind of simplify it. The relationship with banks and customers is, when it comes to mortgages, the bank values new customers over existing well-paying customers.
Wow.
So, and it's no different than Rogers or Bell.
Okay.
Right? It's the same model, right? They want to attract new business. How do you attract new business?
Give them more options.
Give them, give them a lower price. Is really what it is. Give them a lower price. Right. So, and again, even if you're in good standings, that renewal rate is not going to be as low as what somebody just newly applying for the exact same product is going to get.
So in that case, wouldn't be shopping around a better option for this person? Because you said that for newer customers, it's always a better rate because there's more. They bait them in with a better rate, whatever. So wouldn't shopping around be a better option for them?
It always is. But the problem is, if you have too much debt in addition to your mortgage, you may limit yourself from being able to shop around. If you've had changes in your income, right? Let's say your income fluctuates. Maybe you took some time off, you may took a sabbatical, or you did something, or you decided to, you know what? I decided to go into business for myself, right? Not knowing that could dramatically affect your ability to go shop somewhere else.
Is that because there's more risk in there?
Well, it's because you need to have a consistent 2-year history, and you need to show. So applying for a mortgage, basically, we're looking for, and I'm talking general terms, you need a 2-year work history, right? So they want to see consistent pay. They want to see consistent income because they're, potentially, I mean, they could be lending you $750,000 to purchase a house. They want to make sure that, Yasser makes such and such amount money every year, right? Now, here's the thing is the value, shopping around for a new mortgage now at, let's say, an interest rate of 5.5 with the same, pretty much, I mean, realistically, have people's income gone up as much as the
No.
value of their house has? Absolutely not.
At least not mine.
No, nobody's
No.
has, right? So qualifying for a mortgage 4 years ago is completely different than qualifying today, right? You don't make as much as, potentially what your house is worth. And you're qualifying at a rate that's more than double what it was when you first got your mortgage. Right?
Is there a stress test for existing mortgage holders or no?
So if we're going to take your mortgage and shop it around, you have to pass a stress test again.
Then there is.
Yeah.
Yeah.
And there are some now the government, again, the government, they put Band-Aids on things and they think that, they're making changes, but a lot of the time it's just smoke and mirrors. But, the idea is to remove the stress test when you are applying for, when you have a mortgage and you want to shop around for somewhere, a different rate, right? But there are a lot of rules involved in that, and the lender has to be willing to do it. But generally,
say it again. Sorry. So for existing mortgage holders,
yeah, whose mortgage is coming up for
Yeah.
renewal, and they want to shop around for another mortgage.
okay,
Most of the time, they have to pass a stress test again.
Okay.
So if we're talking 5.5, you're stress testing at 7.5%.
okay,
Right? So that's very difficult if you have a mortgage balance, right? That's potentially very large, or in addition to your mortgage balance, you have excessive debt. So credit
like
cards.
credit card, yeah,
Credit cards
yeah,
and things like
yeah,
that. So-
line of credit, blah
Right.
blah, yeah.
So all that affects it. So what I'm seeing a lot of, and there are times where, I can't help them. Right. And we get to that point very quickly just by running the numbers based on, their situation where, okay, so what your bank is giving you is not the best, but it's all right. And you have to take it.
Mm.
Right. Unless, you want to boost your income by getting a cosigner, something like that. But generally, the conversation that I'm trying to have with everybody is, if your mortgage is coming up in 12 months, get the conversation started now so that we can fix any of these little problems before they become big problems.
So this is my understanding right now. What's going to happen? Somebody's mortgage is coming up, okay, either 24 or 25. Their income has not gone up as much as the new rate they're going to get, and that rate is going to affect the increase in their payments. Now, even with, like, as you say, cosigner, that could be a wife, that could be whoever. Even with cosigner, mostly it's wife, it's partner, your partner. Huh? So you probably are not gonna be comfortable with that increase.
Well, some people have to be comfortable with it because that's the reality of our life, right? So the interest rate has gone up. So you have to already have the expectation that my interest rate is going up.
So where is that extra income being generated, or you got to cut from other places, other expenses to pay for your mortgage, to keep a roof on your head? Is that right?
That's what responsible people do. Yeah, for sure. Yeah, definitely.
But even if somebody is responsible, maybe there must be few individuals who might not be able to make ends meet in those situations. Is that right?
It's true.
Like, for example, 2022, houses were on fire and mortgages were lower. People were getting houses for beyond their means, okay? Because the monthly payments were lower. Now, this is, so 22, so 23, 24, 25, 26. So, like, when their mortgage is up for renewal, that big a mortgage that they bought at the time is now up for renewal at, for argument's sake, 5%. If they had it in 21, 22 at 2%,
Even less.
even less, where's that money going to come from? No matter how responsible they are, that's a big jump in payments.
It's huge.
And to add more to this conversation, when they can't supposedly make that adjustment in their lives, now they are probably thinking of selling the house.
Yeah.
But the reality on ground is that selling that house at the same price in 24, 25, or 26, I think so, even up to 26, that's not going to happen. If they had bought a townhouse for $1.2 million, that townhouse has dropped value probably 5% or even more. Where they can't sell it, so where is that gap going to fill? It's a very tricky situation.
Yeah, and I think people are getting creative.
People are getting creative. Okay, well, so is there ways?
So they're having family members move in with them.
Yeah, putting portions on
to
rent.
subsidize some of that expense. But what we're seeing is, and I think that's why all of us are hoping that the interest rates are going to come down a little bit faster than they realistically will. But that's why people are using their credit cards. And
that's even scarier.
That's even scarier. But the thing is, historically, Canadians will do whatever it takes to pay the mortgage. And they are. Like the default rate in Canada, I think, is like 0.068.
Okay.
Percent.
That sounds good.
Yeah.
But is that something? Do you think something like this happened in Canadian history? Even 2008 was not as bad. 2008 actually worked in my favor, and I got into housing market just because, I got that period of comfort after 2008, that interest rates were lower. Somebody like me could enter the housing market, and I got that cushion period where, the interests were low, and then I could afford to make payments, So when housing prices are still not that low as compared to 2022, but the interest rate has gone that high, I think this is going to create a lot of problems unless the government steps in and eases a few restrictions that they have right now that they had put in to calm down the housing market because it was going crazy. For me, at my understanding of this whole business, I'm a little scared. I'm a consumer of mortgage, so owning a house, paying mortgage. I took advantage of that cushion period after 2008. Now I'm entering in a period of probably volatility where my payments are going to go higher. I'm due in 2025, so I'm a little scared. What's going to happen to my mortgage. But luckily for me, because of this long period between 2008 and 2025, I have built equity. I have paid off my principal. My income, both me and my wife's income, have increase a little bit to the point that, if there is a bit of increase, that we can manage our expenses. For me, life has changed a lot bit that I could probably take that shock. But you remember, I think we crunched some numbers for me I believe in 2022. And while you were doing that for me, you asked me, yes, sir, I have a honest question to ask. And I said, okay. And it said, do you really want to move houses right now? And I said, honestly, I don't. And you said, okay, so we're not doing it right now because you're not comfortable doing it. And I'm thinking, because the way the interest rates were and the way the prices of the houses were, if I would have moved into a bigger house, I would have been in trouble. Is
Could
that
you
right?
imagine that?
Can you like my situation would have been totally changed, and there's a lot of people who did that because if when I took advantage of 2008 on the same principle, if somebody is taking advantage of 2021 or 22, for me 2008 worked out in the best way possible. But for on the same concept, for people who bet on their money and the economy and the low prices and interest rates and all that, it didn't work out for them. So
In the short term, there's going to be some pain for sure. And
yeah,
I don't think we've felt, I want to be optimistic, and I'm usually pretty optimistic, but I don't feel that we have felt the pain that is probably around the corner. Now, with that being said, you'd asked the question about how does somebody who's been responsible, but obviously their income hasn't exceeded, like there's a few options. So the biggest challenge is cash flow for a lot of people, right? So and the cash flow has gone down because of the cost of everything else going up, especially if you have a larger family and young kids. So some of the options available are to extend the amortization, right? And it's not, it works, right? So if you had a 25-year mortgage and now you're at 20 years and, we extend it to 30, bring your payments down, keep them the same. Now, is that something that you should do regularly and every time your mortgage comes up for renewal? No, because you'll never end up paying on your mortgage, right? It's not a good idea to do it all the time. But look, if that's the option and the alternative is losing your house or putting all your extra expenses on credit cards, extend that as long as you can.
Yes.
We have lenders that will do 35 and even 40-year amortizations. Right? And it comes with a fee to extend it that far. But look, if that's what cushions you temporarily because your mortgage, like we did a bunch of those, 6 months ago, because that's what kept people in the house. And it's not just keeping them in the house. It eased a lot of pressure off of people.
Yes.
Right? Like that's not, that's a great feature.
That's a tool. It's a great tool to use
for the time. Definitely a great tool. So there are products out there that can help people, but you can't help people if we don't have the conversation, get the conversation started early, so that we can solve problems before the time comes up. Like if you're asking me, normally what they would say is if your mortgage is coming up in 90 days and 3 months, reach out to a mortgage agent or broker. Oh, a year and a half ago, I was saying if your mortgage is coming up in 12 to 16 months, reach out. Let's get talking.
Okay.
Because people need that. Right?
That time to
sometimes they need
to prepare.
Yeah, well, not only that, sometimes they need the opportunity to file their taxes differently. Right? Because the way you file your taxes is going to determine whether or not you qualify for a mortgage, whether you're a first-time home buyer or you want to shop somewhere else. Right? And this is especially for people that are self-employed. So, to talk about self-employed home ownership, there are a lot of different rules. It's totally attainable. I said, but, if you're cutting every corner and taking full advantage of the tax sheltering benefits, it is going to limit your ability it'll limit your purchasing power. So for some people, that means paying higher taxes for 2 years, maybe 1 year, in order to allow them to qualify for the purchase price that they want to, or to be able to shop around.
So in preparation for this conversation with you, I was looking at some numbers. Toronto Real Estate Board is optimistic. They are predicting higher sales in 2024, and they are hoping that the interest rate by the end of the year, Bank of Canada would start reviewing them downwards. The first one was a shocker. Everybody was expecting, they might revise it a little bit, but they did not. So now the sentiment in the market is that it's probably going to happen by I think they do 8 reviews a year.
Yes, I don't know the exact number.
They do 8 reviews, and I think they are hoping that by the end of this year and throughout 2025, they would keep revising and bring it closer to 5%. And they're hoping, they're predicting that the sales would be 16% higher. There'd be more houses being sold this year as compared to last year. So I think that's a positive news. I think because it's a real estate board, it's and they want to
keep things positive.
They want to keep things positive, and I think it's when I read that as a consumer, as a homeowner who still has a long way to go in actually owning this house, paying off. Those numbers matter to me. When I see that, I feel good that, the market had a dip and now we are getting to a point where it's going to get better. I see 2024, okay, I've been through 2023, tough year. 2024, another probably tough year, but at the end of the year, things will start getting better. And 25, if I'm being selfish, because I'm due in 2025, I see that and also I'm due at the end of 25, I see there's hope at the end of the tunnel, So where do you see, okay, take me as an example.
Mm-hmm.
Where do you see the market trending by the end of 24 and throughout 25?
So it's funny. Everyone is talking about, Bank of Canada, when are they going to drop the rates? When are they going to drop the rates? And, rates for fixed rates have dropped nearly 1% in the last 4 months. So you can get an insured, meaning under $1 million, an insured mortgage right now for under 5%. Right now.
So this is the bank rate. This is the Schedule A bank rate.
So what I'm talking about is a fixed rate mortgage, meaning it's not based on the prime rate, which is the Bank of Canada's prime rate that they set and they make an announcement. So that Bank of Canada rate, I think, is at 7.25 right now. That rate, when they come out with those announcements several times a year, affects the variable rate.
Okay.
Right? So everyone is waiting for that. But in the meantime, the fixed rates are coming down.
Okay.
And they've already come down. Like the idea that we would have a fixed mortgage rate right now under 5 that starts with the number 4 6 months ago would have been a dream for people.
Yeah.
Right? So the rates are coming down. If you're looking at the variable rate, what do I think is going to happen? I think they're being very optimistic. I said that decline to lower that prime rate and the variable rate decreasing is going to be very slow. At most, you're talking about 0.25% at a time. I don't really have too many conversations about the Bank of Canada and interest rates because that's not my value. I can't control that.
Mm-hmm.
To me, it's the equivalent of gambling. It really is when you're dealing with the variable rate.
But isn't that a predictor of I should buy a house or not? Because
most first-time home buyers, most people that buy houses don't get a variable rate mortgage anyways.
Fixed. They get fixed.
They get the fixed. And right now, it's below 5%.
Okay.
Right? And realistically, when everything settles, everyone can agree that we are not going to have the interest rates that we had during COVID ever. That will never happen again.
And what about those after 2008 rates? Never going to happen?
So my impression,
another market crash.
Here's what I believe.
Yeah.
I believe best case scenario, we're going to end up with interest rates at about probably 3.8, 3.9%. And that's not going to happen very quickly.
I'm going to take that.
Yeah.
3.9%. I'm going to take that any day.
So if I told you today you could get a 4.7, right? The difference between that is, what are we talking? $20 a month? Right? So think about it. if we're right now just below 5%, realistically, let's be conservative. Let's say that lands around, let's say it lands at 4%, right?
Mm-hmm.
Okay. Houses are like 30% cheaper than when they were at the peak.
But they're going to go up.
Right. But what I'm saying is, if we're talking about a difference of, let's say, $20, $25 a month on that mortgage, between getting it now at under 5% and then waiting for it to go down to 4%, difference of 0.75%, who's saving? The guy that bought the house for 30% less, or the guy who's saving 0.75% on the mortgage, but the house is 30% more, right? The mortgage is going to be 30% higher. You get what I'm saying?
Yeah.
So, and again, at the end of the day, it still depends on the person, individual needs and what they can afford. I'm not saying, you know, you always hear that they have this slogan that they throw around. It says, "Date the rate and marry the house."
Okay.
Right, you're going to have the rate forever, or you're not going to have the rate forever. The rate can renew every couple of years.
Every 5 years.
You're going to have the house forever. It's better to get the house at a lower price and temporarily pay for a higher mortgage. You know, I'm not going to throw that around, but there is something to be said that if you're waiting for the interest rate to come down to like a 4,
the house's price is going to go up.
the house price is going to go up, especially since we have, I mean, how many new Canadians are we taking in every single year?
Oh my God.
Right. And we're both immigrants.
Yes.
But this is not a good thing. The way that it's being done is not a good thing. Immigration is fantastic for the country.
Yes, but the way it happened in the past 1 year or 2 years, it's probably not the right way to do it.
It's too aggressive.
Yeah,
and that's putting a lot of pressure.
Also, Ahmed, I don't see. Okay, that's
a whole
probably
other
exactly that's.
We're not going to go down that road
exactly.
right now.
But the thing is,
and I think what we're going to see is a shift from the next generation. You know, the Gen Zs that I'm meeting. I hate using those terms and labels, but you know, they are savvy. You know, they are very savvy. All the ones that I've met in regards to, you know, their financial awareness. You know, because they are dealing with it. They're learning from. You know, they're learning from mistakes. And I think one of the biggest things is the biggest limitation from our generation was you have to buy a house where you work. Right? That was usually
like closer to.
Yeah.
Okay.
Yeah. You have to buy a house that's close enough to your work and to your employment. And that was kind of the factor of, you know, deciding where you're going to buy a house, you know. And I think that's changed. And I think, you know, with the positive from COVID was that certain jobs don't require you to go into work. And I think that the next generation, I think my kids, and we were already, you know, my dad taught me and my brother at a young age that he said, look, he said, if you want to be happy in this country, you need to be in business for yourself, just for the value of time. And he was a professor, you know, but it was, my kids see it because I work from home. Right, my office is right in the living room in the front of the house, and they see the struggles, they see the ups, they see the downs, and it's good for them because, you know, there are times where, you know, things are tough and things are challenging, but I have the ability to be home with them. Right, there's no price you could put on that.
Honestly.
Right.
Oh yeah.
You know, so you know, what I think the positive out of this is people are going to shift their ideas on what career paths that they take. I think flexibility is going to be a priority. A flexibility over, you know, I'm working on a file right now for a client that's looking to purchase outside of Ottawa, you know, not like 35 minutes from Ottawa, right? And a 3-story townhouse is selling on average for $240,000. And the property tax on that is $1,100 a year.
So a 3-story townhouse.
So basement, main floor, and upstairs.
Is selling for how much?
Is selling, well, on average, the past couple that we've been monitoring sold for $240,000. $240,000. The property tax is $1,100 a year.
Okay, just am I hearing the right numbers? Because Isn't that cheap
That's in comparison to what we're paying
in Toronto?
in the GTA. Yeah,
Yeah.
absolutely.
Wow.
Absolutely.
How, that's the general market in Ottawa, or
Well,
is
there's, I mean, I'm sure there's hotter spots, and there are less, and there are less. I mean, condos are selling for under $200,000. 1 bedroom, 2 bedroom.
I know there's a difference in how the two cities are, like GTA, Toronto, or Ottawa. Um, the the business opportunities or the job opportunities between the two cities are variedly different. But still, the price comparison between a 3-story townhouse outside of Ottawa and the price of a townhouse
Newmarket.
outside of Toronto,
Yeah, let's say Newmarket.
Newmarket,
Let's say it's the equivalent distance.
50 kilometers out of Toronto,
What is the townhouse here in Newmarket or Aurora going to cost?
$1 million.
$1 million.
$1 million. And back in 21, 22, there was 1.2, 1.3 million.
Right.
A townhouse.
You could qualify for 4 of them outside of Ottawa today.
Wow.
So the income to purchase that, $75,000.
You don't even need like the second incomes.
Nope.
I mean, mostly.
I mean, you could have 2 people that work at, pretty much maybe not full-time hours, 30 hours a week working, at.
So what you're trying to say is that
What I'm going to say.
we're going to adjust our lifestyles.
What I'm going to say is, like, you talked about work opportunities. If you work remotely, why does it matter that you live?
You live in Toronto or anywhere.
Yeah. Then this is why I'm saying this is where this next generation is very savvy, because they're being smart about the employment choices that they choose.
Mm-hmm.
Right? It's not limited to a company that's like stuck in the GTA.
Yeah, or downtown Toronto.
Or downtown Toronto or wherever, and I think this is a big takeaway from everything that we've been experiencing over the last, couple of years.
Yeah.
And
I think humans are good at this adjustability. That's what we've been doing since, the time that we've been on this planet. That whenever there's adversity, we face it and we adjust our lifestyles for that. The only thing is for us, like somebody at my age.
You're saying we're old, right?
No, the adjustment is difficult. Okay, number one. Number two, it could mean that we are adjusting for something less. It could mean that because if we're set up in life for a certain lifestyle, and if we have to adjust with our skills, which at my age probably I cannot learn new skills that easily, as you're saying that the new kids are learning new skills. Huh? They're learning skills for today for this market. So probably adjusted. They're not even adjusting. This is their life. So for people like us, also the immigrants coming in at our age or with kids, for them, when I came in as an immigrant, I thought it was difficult. But now I'm thinking, if I have to come in today to Canada,
could you imagine that?
How could I buy a house?
There are
opportunities. You want to say that?
There are opportunities.
I mean, there's no space right now to learn new skills and adjust in the Canadian lifestyle. I think the way the economy is right now, it's going to be difficult. But, where there's hope is immigrants are always resilient. They find a way. Mm-hmm. They find a way. They just, they make things for themselves, because they bring a different set of skills, which sometimes don't even exist in Canadian markets. So they use that experience to start a new life. And they bring new skills, they bring new attitudes and this is what diversity, this is what immigration does to an economy. It brings in new people with new mindset and resiliency. Mm-hmm. And that's where I think that's the only hope for Canada, to be honest, and for new immigrants.
Well, you heard it here first. There's no hope for us old folks.
No, I think we're fortunate enough, like at least I am fortunate enough that if I look back, that when I came, the conditions that I came in, it was a big shock when 2008 happened, but it worked out in my favor because, as I said, I was a new immigrant at the time, not new, but relatively newer. I was resilient. I kept working. I kept grinding, and I passed through that phase. Bought a house. Very tough decision to buy a house in those days. It was very gloomy market. Nobody was promoting taking up that big a loan responsibility. But I look back and I'm like, that was the best decision of my life.
Yeah.
Best decision.
Yeah.
As they say, when do you want to buy a house? Like yesterday.
Yeah.
You should have bought the house yesterday, So I bought the house yesterday.
And there's opportunities like that today. And I think,
of course,
but I think one of the, unpopular conversations or unpopular opinions is there's a bit of, and it's going to come off a little insensitive, but there's a bit of entitlement that, if you're born and raised here, you should be able to afford a place in the Golden Horseshoe.
Mm.
Did not. Absolutely not. Like when we moved to Newmarket, I couldn't even tell you where Newmarket was on a map.
Mm.
No idea.
Like before you moved here.
We moved in 2010.
Yeah. So before that,
Before
you didn't even hear of
where
this
never
town.
even heard of Newmarket.
Yeah. Only Toronto.
Never even other than so I knew Brantford, which is where I was originally born, west of Hamilton.
Yeah.
People even know where that is. Home of Wayne Gretzky and Bell Homestead. Telephone was invented there.
Oh yeah.
Yeah. I knew Toronto.
Yeah.
And I knew London, and I knew Barrie.
Yeah.
I didn't know that there was anything in between. Toronto and Barrie. And judge me, but
there's a handful of towns.
Yeah, there's a handful of towns there. I had no idea. And at the time when we bought our house, it was the scariest moment of our lives.
Same as me.
Credit to my wife again.
Yeah.
If it was up to me, I would have never bought the house.
Yeah.
But she's like, we could do it. We'll figure it out. We just got to do it.
Yeah.
I worked 3 jobs to qualify for that mortgage.
Wow.
She was working multiple jobs.
Yeah.
You
make it happen, huh? You make it happen.
Again, it's like and I look back and I don't think it's as difficult as it was. And I'm not trying to promote it because the challenges are much, much higher now because the cost is much higher. Right?
I think
the amount of money that people are making versus, cost of to qualify for a house, you were looking at 2 to 3 times your income back then. 2 to 3 times whatever your income was multiplied by 2 or 3. That's the price of the average house. Now we're like 10, right? So there's no comparison. It doesn't matter what the interest rate is. At that point, it makes no difference what the interest rate is.
Okay, Ahmad, if you could please sum it up for me, the mortgage business in relationship to the current environment and what to look forward to for 24 or 2025. If you could just sum it up for me. I really love the fact that you could buy a house for $250,000 in Ottawa, and I would encourage it. Like if I was looking for a house, I would look for opportunities like that, as I did back when I bought a house. We were in Toronto, and I didn't care if I have to move 50 kilometers outside to get into the housing market, to get to have a house. Otherwise, if I would have stuck with Toronto, I would have never bought a house, because at that time, Toronto was unaffordable for me. Now, Newmarket is unaffordable for me, but I'm living here because I've built that. So could you sum it up for me, please? And what with some optimism for new home buyers, where they're going to find, how they're going to find it affordable to own a mortgage.
Yeah, absolutely. I think if you're a first-time home buyer, the optimism is this: you're trying to hit a target and you don't know how to, because you don't know how lenders in today's climate would view your file and your financial situation. That's why the most important thing to do is get that conversation started with the mortgage professional, with the real estate agent, even if, it's only a seed at this point, right? Because any of the information that you have is just from the internet, likely, or people that you've spoken with. This is a business that I've learned very quickly changes on a daily basis. Mortgage products are constantly changing. I get emails every day, in the morning, in the afternoon, sometimes later on in the evening, with changes to mortgage products, changes to rules, changes to interest rates with different lenders.
So, sorry to cut you, that's because lenders also want to do business, because they're not going to sit around and wait for interest rates to come down
Correct.
and then get into business, because they want to disperse money, and they have,
Correct.
which they have, and
It's a misconception.
Yeah.
The misconception is that the banks are the bad guys, and the thing is, it's in their best interest when they're lending money. They want to, which is why they're being more competitive now than they have ever been. Competitive in a sense that, they're taking on more risk by extending amortizations, extending debt to income ratios, things like that, where they're allowing you to maximize your purchasing power, sometimes at a little bit of an expense, a little bit of a cost, or a little bit of a higher interest rate. But it's getting people into the mortgage. It's getting people into the house that they want to buy. The most important thing is, again, you don't know the roadmap to your end destination. You don't know how to get there unless you have that conversation with a professional that can map things out based on where you are, because you don't know where you are today. Like I work with people that say, yeah, I make $85,000. Great. Show me your T4. It's 85,000. That's from this year. Show me last year's. Last year's was 55. Well, I got to take a 2-year average of that. Right. So there's a lot of things, but again, there are a lot of, people are talking about the interest rates in the Bank of Canada. Like I said, you can get a fixed rate mortgage right now that starts with a number 4.
When I got into looking for a house, it was just a thought, and then I just went in, talked to a real estate realtor, and then the process started. What's the best first step today? Realtor, look for a house, find the price point that you're comfortable with, or go to a mortgage broker and talk to them first and see where you stand. I think right now in this environment, I think we should understand first that where do I stand in terms of affordability?
Yeah, I think the real estate agents are going to give you a realistic price for an area that you might be interested in living in. That's their expertise. Like if you have a good realtor, they're going to know a neighborhood, they're going to know a city. They're going to give you, the boots on the ground. Here's what houses are actually selling for in this area, and here's why. Here's the differences. They know that. I don't follow that information. But at the same time, they're not having that financial conversation with the home buyer. So it's important to have both. But definitely do not go shopping. I wouldn't even look at a house without first having a mortgage assessment or pre-approval in place.
So you got to do that first.
Got to.
Go.
How can you confidently even think about looking at places if you don't know how much money's in your pocket? Right?
Yeah.
It just doesn't make sense. And it could lead to trouble, but thankfully we see, 5 days condition of financing is normalized again. People are being a little bit more careful, which is a good thing. But you got to know, that the end result, the end target is home ownership. You don't know where you're starting from, right? Because you don't know how the bank is going to look at your financial situation today. Based on what that looks like today, we can create a roadmap to get you to where you want to be, which is inside that house.
That's cool.
And there's, it may not be today, it may not be tomorrow, but, I have, a short story. One of the clients that I've been working with for the last 8 months, had some credit issues, wants to be a first-time home buyer. Never thought that they could purchase a place.
Okay.
and we just got them pre-approved because we worked with them on fixing their credit situation. You know, but you know, they received advice from friends, from family that, you know what, your credit score is 500. You're never going to buy a house. You got the credit score up over 650.
But I think so that's where you needed that 8 months period where you worked with the client and you built their financial stability that the bank has to look for. Because if I start building my file on myself, I don't know what the bank's going to look at.
Right.
You know, so you work on the areas that you know specifically that the bank is going to look at these 1, 2, 3, 4 points, and then you try and improve those or get them qualified based on those points. And that's where your advice comes in, huh?
Yeah. And like in that particular case, you know, that young professional had one credit card, and the credit history on that credit card was not good because they were young. No one taught them how to, you know.
Do you think having multiple credit cards is good for
Well, you need to have at least 2 trades. So you need to have a credit card, maybe 2 credit cards, or 1 credit card and line of credit, something like that. So they call them trades, and the bank wants to see that you have a consistent pattern of positive
movement,
payment and usage. So in this case, I looked at it, and you know, they were under the impression they would never be able to purchase anything because this was set in stone and how difficult it was. And really, what it just took was, you know, not a conversation with a parent, not a conversation with a friend, but a conversation with somebody that understands how debt is, you know, how is managed.
Yeah.
And the easiest way to solve a negative credit history with 1 credit card is to start a new one with positive automatically. Pay that one off, don't close it, but open up another one. We opened up 2. And what we did was to ensure that we would never run into that situation is, you know, there are certain prepaid credit cards that report every usage and every payment to Equifax and to TransUnion, right? So not only that, I said, throw $500 on this particular prepaid credit card, okay, and use 30% of it every month and pay it off to 0 every single month.
Just show some history.
That's it. Create the new history.
You create the new history.
Right. So all we're doing is creating the new history. And at the time, it took a while to get that credit card. It took like 2 months. Over 6 months, we brought the score up over 100. We're over 650 right now. Right now, they can actually purchase.
Very cool.
And now they can be pre-approved. I couldn't even put them on a mortgage application, and now we got them pre-approved. You know, so it's like having conversations with friends, having conversations with family, you know, doing your research on the internet only takes you so far. You don't have.
Could be demoralizing sometimes.
Well, it's debilitating,
like
right?
What I do when I go on social media, it's all like bad news, honestly.
Everything is cancer.
Everything is cancer. Everything is bad news. I think the positive is that if somebody buys right now, they would buy cheaper, but the interest rate would be a little higher. But the offset, when the interest rate goes down,
the value goes up.
The value goes up, but you've already bought at a lower value.
Correct.
So you have gained a lot of equity there, which is a positive thing. And I think that's one of the positive that we can take that I can take from this conversation, that I have learned that, you know, although things are gloomy, but if you manage your finances and if you just take this plunge right now, hopefully in a couple of years, you'd probably be in a very good place.
Yeah, I would say so. Definitely. And those are the conversations that I'm having with buyers right now is, you know, first of all, if you can't withstand, you know, the expense, then it might not be for you.
Yeah.
It's definitely not, because you don't want to put yourself in a bad situation.
Yeah.
But if you're in it for the long haul and it can be managed, and these are all numbers that we crunch. It's not just what you actually can afford on paper. And a lot of the times it's having those conversations with clients to say, yeah, you qualify for $1.2 million, but should you really spend $1.2 million? So those are the kind of conversations that we have. And again, like I remember when like you had said, and you brought up when we first talked, I I'm 100% honest and transparent with every transaction and every conversation, because it doesn't serve me. It doesn't serve anybody else. And, you know, there is, and it's no secret that there's, there are alternative motives, and, any business, doesn't matter what it is. There are bad business people, that are self-serving.
Yeah.
And that's why for me, it's always, and I know because I put myself in that situation. I remember, I will never forget what that feels like to buy your first house. And I know that, if I were to purchase another one, that feeling would still be there. In fact, it would probably be worse.
Yeah.
It would probably be worse. So the conversation is always, is this something that you really want to do? And it's not a popular question, especially with realtors, to have a financial advisor asking them,
because they want that transaction.
They want the transaction as well, right? Because they have a family to feed as well. So they're doing the same thing. You have that conversation, and we had that conversation, so it's a lot to think about. I think in this country, I think that, real estate investment is still the best.
Hands down,
the best investment.
I 100% agree. Ahmad, thank you very much.
Thank you.
I learned a lot. I gained, if I'm getting into the market right now, I would have probably, I would probably start thinking about it. Maybe still, like, as this client that you're helping, maybe might take me 8 months to a year to to make up my mind, because $1 million responsibility is not like, it's not gonna go away tomorrow if I take it today. It's just it's a lifelong decision. Probably. So thank you for that, and thank you for coming. And then doing this for me. Hopefully we do it again.
Yeah, I look forward to it. Thank you. I appreciate it.
Thank you very much.